People are using Bitcoin to store their monetary energy for the long term. There's a reason why they have differentiated their products and their services with a big tech monetary network that's exploding at 200% a year.
Bitcoin does this 4-year cycle, and we're in that special 4th year of the cycle that everyone gets excited about, which is when price comes out of nowhere and rips upwards in a very fast trajectory when the entire world takes notice.
In this video, Willy Woo speaks about the Bitcoin phase going on right now. He believes that 2021 is a special year for Bitcoin as it completes a 4-year cycle, much like 2013 and 2017 cycle. This is a time when Bitcoin price comes out of nowhere and rips upward in a fast trajectory. After every 4 years, there is a mismatch between supply and demand, and coins get halved that results in a supply shock. He defines Bitcoin in 3 terms: de-risk enough, big enough, and liquid enough. According to Willy, as more and more people take interest and hold Bitcoin, the more it's going to be defended against governments and politicians. Stay tuned till the end of this video if you want to know why Bitcoin is important in bringing a digital revolution and is unstoppable. Hey everyone, and welcome back to Wealthy Value, the community for people looking to become financially smarter. Make sure to subscribe to our weekly videos where we cover the future of business, innovation, and finance. Also, stick around till the end of this video where I will share a technical analysis explaining the most recent Bitcoin dip. Now, let's enjoy the video.
And the last time we had that was 2017, and the year before that was 2013. So it's a little bit like a comet revisiting. And the reason behind that is actually it's designed into the Bitcoin's protocol. When you start this network, you've got to give the coins out, right? And so we bring them into existence by mining them. And so like miners will come in and put in a lot of electricity to process the transactions. For that, they get a reward of new coins being mined into existence. So this is kind of the inflation schedule of Bitcoin. And so every 4 years, the rate at which these new coins are brought into existence halve. And so what happens is if you've got half the number of coins being created every 10-minute block, if the rate of coins gets halved, and that happens once every 4 years, what you get is a mismatch between the demand and supply because the supply just got halved. And so that creates a supply shock, and it gives essentially an impulse to the price. And so that's where we are in 2021. That's where we went in 2017. And 2013 was the first really public one of that. But it was really for the very technical. In 2017, that caught the public eye for the very first time. It made, CNBC, mainstream news. And I call that the cycle where retail came in and got very excited. Everyone got access to buy. And the cycle we're in now is essentially building on top of that. And now it's the institutional players that are coming in. Like Bitcoin now has reached that line in the sand called $1 trillion market cap. So it's an asset bucket that holds $1 trillion of valuation. If you're going to have bonds, I think that's in the over 100 trillion. I'm not sure exactly that figure. Stocks are 100 trillion. Fiat money is 100 trillion. Gold is 11 trillion. Now you've got Bitcoin that just sort of birthed into that $1 trillion club. It's de-risked enough and liquid enough and big enough for the institutions now to come in. Institutions is another way of saying if institutions are buying, they're essentially coins that are being bought by a custodian that is owned by a whole lot of mums and pops, right? It's public markets. Whether you're a public company or a hedge fund, they have their investors. So essentially, it's just very large concentrations of money held by a lot of people. And so if you were to say Tesla bought $1.5 billion of Bitcoin a few months back, that, I don't know how many people own Tesla stock, but that's a lot that now have exposure to Bitcoin. And I think it de-risks the failure points, because the more people that have vested interest in the network and holding Bitcoin, the more that's going to be defended against, attackers like governments and politicians that want to shut it down. Even if I don't think they could shut it down, but it just makes it more difficult for them to provide bearish action to this. It's been a very, very consistent doubling over 12 years. Well, the first year just went crazy high, and then after that, it's almost like a Moore's law. Every year, the number of users that are on the network double. And so we're currently at around 2 to 2.5% of the world that have exposure to this asset class. And so that's significant if you think about next year that being 5%, the year after that being 10%, and so forth. So current projection right now is in the next 4 years, 1 billion people will have exposure to this asset. And remember, this trend has been going on for 12 years. So it's not at all outrageous. It's actually a conservative estimate that 1 billion people have access in the next 4 years, and then after that 2 billion and so forth. So we're very much on the tail end of the adoption. It's one thing to have high gains, but the other one is to measure the risk involved in it. Most of the risk in Bitcoin has been removed. If you're a long-term investor, not in the short-term investing or trading, but for a long-term investor, it's very much removed. I've got a chart of that. So the liquidity increases, so if you want to sell a lot of it, there's probably someone else that's going to take the other side of it, and you can sell into that buyer. So the price doesn't move as much because liquidity base is there. So the volatility starts to drop. And in fact, if you chart that over the long term, we're looking like a dozen years from now, if this continues, which it has for 12 years, a dozen years from now, we'll start to move down into the volatility of, believe it or not, like the US Euro pair at peak volatility. In a dozen years, we'll be in amongst that kind of volatility, which,
wow.
It sounds pretty outlandish if you're used to the volatility today, but the 12-year history of it is the trend down is very, very consistent. And if you take a look at the risk involved and you calculate that out into a Sharpe ratio, is what we use, the risk-adjusted return is the best risk-adjusted return of any asset on the planet. And it's been like that since the birth of Bitcoin.
Phenomenal.
And there you have it, what Willy Woo thinks about Bitcoin. Now let's proceed towards a technical chart analysis of Bitcoin explaining the most recent price dip. Bitcoin displayed why many investors are reluctant to view the coin as a currency just yet, as it fell from $64,000 to $47,000 in a matter of days. Volatility was not limited to the downside, however, as recent losses were quickly stalled, as the digital asset found support along a technical trend line. The decline of more than 25% has since been reversed, although further ground will have to be covered before Bitcoin can look to retake recent levels and continue its record-setting streak. The announcement from Tesla saw BTC dropping from the 50-day SMA at around $56,500 to reach as low as $48,440 by the end of the day. The plummet continued yesterday as BTC dropped as low as $46,000. Luckily, it rebounded by the end of the day to climb above a long-term ascending trendline. After that, it is pushed higher back above $50,000. Looking ahead, the first resistance lies at $51,000. Now, we will have to wait and see how this trend goes in the next couple of weeks.